Hello and welcome to our comprehensive guide to understanding the stock market. In this video, we will explore the basics of the stock market, the different types of securities, the factors that influence the market, and the strategies for successful investing. Part 1. The basics of the stock market. In this section, we will cover the fundamentals of the stock market, including what it is, how it works, and the different types of securities that are traded. We will also discuss the role of stock exchanges, such as the New York Stock Exchange and Nasdaq, in facilitating the trading of securities. Part 2. Types of securities. In this section, we will go in depth on the different types of securities that are traded on the stock market. This includes stocks, bonds, mutual funds, and exchange-traded funds, ETFs. We will discuss the characteristics of each type of security, the risks and rewards of investing in each, and how to choose the right securities for your investment portfolio. Part 3. Factors that influence the stock market. In this section, we will explore the various factors that can affect the stock market, such as economic indicators, political events, and global news. We will discuss the relationship between these factors and the stock market, and how investors can use this information to make informed investment decisions. Part 4. Strategies for successful investing. In this section, we will provide some tips and strategies for successful investing in the stock market. This includes diversification, timing the market, and long-term investing. We will also discuss the importance of risk management and setting realistic investment goals. Part 5. Frequently asked questions. In this final section, we will address some of the most frequently asked questions about the stock market, such as how much money do I need to invest and how do I choose the right stocks. We will also provide some additional resources for investors who want to continue learning more about the stock market. Part 1 of our video on understanding the stock market will focus on the basics of the stock market. Firstly, what is the stock market? In simple terms, the stock market is a platform where publicly traded companies can sell shares of their ownership to investors. Investors can buy these shares, giving them a stake in the company and the potential to earn a return on their investment through share price appreciation or dividend payments. Stocks are the most common type of security traded on the stock market, but other securities, such as bonds, mutual funds, and exchange-traded funds, ETFs, are also traded. Each type of security has its own characteristics and risks, and investors can choose the types of securities that fit their investment goals and risk tolerance. One of the key functions of the stock market is to provide liquidity to investors. When an investor buys shares of a company, they can later sell those shares on the stock market if they want to exit their investment or realize a profit. The stock market allows investors to buy and sell securities easily and quickly, providing a level of flexibility and access to a wide range of investment opportunities. The stock market is also regulated by government agencies such as the Securities and Exchange Commission, SEC, in the United States, which oversees the financial reporting of publicly traded companies and works to protect investors from fraud or other unethical practices. Stock exchanges, such as the New York Stock Exchange and Nasdaq, provide the infrastructure for trading securities. They set the rules and standards for trading and provide the technology and systems for buying and selling securities. In summary, The basics of the stock market include understanding what it is, the different types of securities that are traded, and the role of stock exchanges in facilitating trading. By understanding these basics, investors can start to explore the opportunities and risks of investing in the stock market. In part 2 of our video on understanding the stock market, we will go in depth on the different types of securities that are traded on the stock market. The most common type of security traded on the stock market is the stock, also known as a share or equity. When you buy a stock, you are buying a portion of ownership in a publicly traded company. Stocks are typically categorized by market capitalization, which is the total value of all outstanding shares of a company. Large cap stocks have a market capitalization of $10 billion or more, mid cap stocks have a market capitalization between $2 billion and $10 billion, and small cap stocks have a market capitalization of less than $2 billion. Another type of security is a bond, which is essentially a loan made by an investor to a company or government. When you buy a bond, you are lending money to the bond issuer and receiving interest payments on your investment. Bonds are generally considered less risky than stocks, but they also offer lower potential returns. Mutual funds are another type of security that are popular among investors. A mutual fund is a professionally managed investment portfolio that pools money from many investors to purchase a diversified mix of stocks, bonds, and other securities. Investors in a mutual fund own a portion of the fund's portfolio, and the value of their investment is determined by the performance of the underlying securities. Exchange-traded funds, ETFs, are similar to mutual funds in that they provide access to a diversified portfolio of securities. However, ETFs are traded on stock exchanges like individual stocks, and their prices fluctuate throughout the trading day. ETFs also tend to have lower fees than mutual funds, making them a popular choice among investors. In addition to these securities, there are also options and futures contracts, which give investors the right to buy or sell a security at a predetermined price in the future. These securities can be more complex and risky than stocks, bonds, and mutual funds, and require a higher level of knowledge and experience to trade. By understanding the different types of securities that are traded on the stock market, investors can choose the securities that fit their investment goals and risk tolerance. It's important to note that each type of security has its own risks and rewards, and investors should carefully consider their investment objectives before making any investment decisions. In part 3 of our video on understanding the stock market, we will explore the factors that influence the stock market. The stock market is a complex and dynamic system that is influenced by a wide range of economic, political, and social factors. Economic factors are among the most significant drivers of the stock market. Economic indicators such as gross domestic product, GDP, inflation, and unemployment rates can have a significant impact on the stock market. For example, if the GDP is growing, it can lead to increased corporate earnings and a rising stock market. On the other hand, high levels of inflation or unemployment can lead to decreased consumer spending and lower corporate earnings, which can cause the stock market to decline. Political factors can also influence the stock market. Government policies such as tax rates, trade policies, and regulations can impact the performance of the stock market. For example, if the government lowers corporate tax rates, It can lead to increased corporate earnings and a rising stock market. Conversely, if the government imposes trade restrictions, it can lead to decreased corporate earnings and a falling stock market. Social factors such as demographic trends, consumer behavior, and cultural changes can also impact the stock market. For example, if a new technology or product becomes popular, it can lead to increased demand for certain companies and their stocks. Similarly, if consumer preferences shift away from a particular industry, it can lead to decreased demand for companies in that industry and a falling stock market. Finally, global events such as natural disasters, geopolitical tensions, and pandemics can have a significant impact on the stock market. These events can cause market volatility and disrupt global supply chains, which can lead to decreased corporate earnings and a falling stock market. In summary, the stock market is influenced by a wide range of economic, political, and social factors, as well as global events. By understanding these factors and how they impact the stock market, investors can make informed investment decisions and manage their risks. It's important to note that the stock market is inherently unpredictable and can be volatile in the short term, so investors should always carefully consider their investment objectives and risk tolerance before making any investment decisions. In part 4 of our video on understanding the stock market, we will discuss the different ways investors can participate in the stock market. There are several ways to invest in the stock market, each with its own advantages and risks. One of the most common ways to invest in the stock market is through buying individual stocks. When you buy a stock, you are buying a share of ownership in a specific company. Stocks can offer the potential for high returns, but they are also risky and can be subject to significant fluctuations in price. Investors who choose to invest in individual stocks should research the companies they are interested in and carefully consider their investment goals and risk tolerance. Another way to invest in the stock market is through mutual funds or exchange-traded funds, ETFs. These investment vehicles offer diversification by investing in a broad range of stocks, bonds, and other securities. Mutual funds and ETFs can be a good option for investors who want to participate in the stock market without having to choose individual stocks. However, they also come with their own risks, such as the possibility of losing money if the fund performs poorly. Another option for investors is to invest in index funds, which are mutual funds or ETFs that track a particular stock market index, such as the S&P 500. Index funds offer a low-cost way to invest in the stock market and provide broad diversification. They are also relatively low risk, as they are designed to follow the performance of the market as a whole rather than trying to beat it. In addition to these traditional ways of investing in the stock market, there are also alternative investments, such as real estate investment trusts, REITs, commodities, and derivatives. These types of investments can offer unique advantages, such as diversification or the potential for high returns, but they also come with their own risks and may not be suitable for all investors. When choosing how to invest in the stock market, it's important to carefully consider your investment goals, risk tolerance, and time horizon. It's also important to remember that no investment is without risk and that past performance is no guarantee of future results. By understanding the different ways to invest in the stock market and the associated risks and potential rewards, investors can make informed decisions and build a well-diversified investment portfolio. In part 5 of our video on understanding the stock market, we will discuss some of the key strategies that investors can use to make informed decisions when investing in the stock market. One important strategy is fundamental analysis, which involves researching the underlying financial and economic factors that drive a company's performance. Fundamental analysis can help investors determine whether a company is undervalued or overvalued and can also provide insights into a company's growth potential, profitability, and financial health. Another strategy is technical analysis, which involves analyzing patterns in stock price movements to identify trends and potential entry and exit points for trades. Technical analysis can help investors time their trades more effectively and can also provide insights into market sentiment and momentum. Investors can also use a combination of these two strategies, along with other tools and techniques, to build a well-informed investment strategy. For example, some investors use a value investing approach, which involves looking for undervalued companies using fundamental analysis and then timing their trades using technical analysis. Other investors may focus on long-term growth potential and use a growth investing approach that involves identifying companies with strong earnings growth potential. It's important for investors to remember that there is no one-size-fits-all investment strategy, and the best approach will depend on an individual's investment goals, risk tolerance, and personal preferences. In addition, investing in the stock market always carries some level of risk, and it's important to carefully consider the risks and potential rewards before making any investment decisions. Overall, by understanding the key strategies and techniques used by successful investors, individuals can make more informed decisions when investing in the stock market and build a well-diversified investment portfolio. In conclusion, understanding the stock market is essential for successful investing. By knowing the basics of the market, the types of securities that are traded, and the factors that influence it, investors can make informed decisions and achieve their investment goals. We hope that this video has provided you with a comprehensive overview of the stock market and has given you the confidence to start investing. Thank you for watching, and please feel free to leave your comments and questions below.